So transaction number 4, sold goods for cash, $64. Sold goods for cash, $64. So here we are selling inventory. Those goods which we bought for resale purpose, now we are selling these items. So whenever these items are sold in business, we will name them as a sales. Why do we say sales? Because it is the appropriate account. So in this situation, sales is increasing. So definitely when sales increase, uh, definitely when sales increase, our capital increase, and that's why it increases the credit side. So sales is a revenue for the business. Sales is revenue for the business, and when sales increase, the revenue increase, and credit side increase. So very first, we record this transaction on the credit side. So sales will be written on the credit side. And what is the credit amount? Credit amount is 64. So 64 is on the credit side, $64. So why these items are sold? For cash, and cash will increase our assets. So this is the cash sales. So we are receiving cash. So we will write cash on the debit side, and debit side 64. So every transaction has a dual effect. So sales are increasing. So when sales increase, it increases the revenue, and then it increases the credit side. And why sales are increasing? Because of the cash. Cash is coming in the business, so it will increase the debit side. I hope you have understood. Now moving to next slide. In this transaction, return goods to F Hurd, $46. So F Hurd is a credit supplier. We bought goods on credit from F Hurd in the previous transaction. So when we bought goods on credit, so it was recorded as a purchases, and now we are returning those items. Like some items were faulty, due to some reasons we need to return these goods to our credit supplier. So definitely when we return these items to our supplier, it will decrease our liability, because now we will not pay for this amount. So in this case, we will decrease our liability. So very first, when liability increase, as I told you, it increases the credit side. So when we bought on credit from effort, we recorded our entry on the credit side. But now we are returning items to effort. So effort's liability will be decreased in our books. So we will decrease the liability, and then it will be recorded as a debit entry. Why? Because whenever liability increase, it is a credit. So when liability is decreasing, it will be debited. So very first, we will debit the liability, like effort, $46. So now liability has decreased, effort. Why liability is decreasing? Why we are recording at a debit entry? Because every transaction has a dual effect. So we are returning items for resale. So we recorded purchases, so we will decrease by purchases. But those items which we return to suppliers are called purchase return. Purchase return. Or we can also name it return outwards. Return outwards. $46. So we can write purchase returns or return outwards. Now we can see the next transaction.